morning. You're watching Business World Live. I'm Danie Laurel. Guys, it's the start of another new trading week. It is 10:03 a.m. this Monday morning here in Metro Manila. We are about 30 minutes into this trading day. Let's kick off with our top story. The government's infrastructure push will help the economy recover faster from this pandemic. This is according to the International Monetary Fund, which says the realignment of key projects coupled with structural reforms to improve public investment would be the key for the economy to restart. Now, acting NEDA chief Carl Kendrick Chua earlier told a Senate hearing that the government has approved a revised list of 104 build projects that's worth an aggregate worth of 4.1 trillion pesos. The updated list includes transport infrastructure, national broadband, and the construction of the Virology Science and Technology Institute. IMF country representative Yong Zeng Yang lauded the emphasis given on these projects as he urges the government to allow more businesses to resume operations and expedite ongoing projects to generate more jobs. The IMF had earlier projected a 3.6% GDP contraction for the full year of 2020. It will update its outlook next month. Bangko Sentral Governor Ben Diokno believes the worst is over, saying the economy will no longer deteriorate in the next 12 months. Diokno assured the public that the Philippines is now on its way to recovery that's based on available data. Diokno says the virus is now better contained and lockdowns have been more localized, allowing more businesses to reopen. The country's case load now tops 261,000. That's as the health department reported 3,372 new cases on Sunday. Over 20,000 new recoveries bring the total recoveries to 207,568, while 79 new deaths send the death toll to 4,371. Kicking off the markets report with a health check on our local unit, the Philippine Peso. Take a quick peek at your screens here as we open our Bloomberg terminal together. We are trading a bit stronger, let's say, from the last point. We are down to 48.528 to the greenback. You can see that vis-a-vis the WTI crude oil price, which is still below $40 a barrel, trading at $37.48 per barrel. However, how long is this peso strengthening going to go? Recall that we are trading, hitting the one of the best performing months we've seen in the past 4 years. But this, according to Fitch Solutions, this appreciation will likely cool. That's as the nation's current account surplus might swing to a deficit once the economy reopens. Now, recall, we had our latest print showing basically that our imports were much lower than in terms of a contraction than we had anticipated. So a bigger contraction, there are less imports than we were hoping to have. Of course, that would have fueled our infrastructure projects. Now, this, according to Fitch, we will likely depreciate to 49.75 to $1 here by the end of this year and be back at 50 levels by next year. This is still, however, a downward revision from the previous forecast. So what they had said was that this year would be around 50.58, so much weaker than what they are now anticipating. What are they saying? There's still a lot of strong fundamentals here, like attractive interest rates relative to our peers. They do say that the central bank's policy rate will likely stay at 2.25%. This is echoing Ben Diokno's statements that this might likely be the level that they will keep until the end of the year. This before they see it rising back to 2.5% in 2021. So recall that, apart from this, we've also reported that the central bank is selling gold reserves. And once they sell those gold reserves in the offshore market, those proceeds will be converted back into peso. So that might actually spur demand for the peso. Fitch is also looking at a possible rebound in remittances to provide support for the local unit for the rest of 2020. Now let's move on over to our stock markets, kicking off with Wall Street. You can see on my screen here how the Dow Jones performed up 0.5%. That is Friday's close. S&P 500, a little of an uptick there, but the Nasdaq again being sold off. That's down at 0.6%. Now, global shares are actually coming off back-to-back weeks of declines. That's the first consecutive weeks of declines we've seen since the month of March, when there's this huge sell-off. A lot of our indices all over the world hitting bear market territory. Now, what is Boeing sentiment right now? Well, last week over in the US, some comments from Pfizer CEO saying that there might be a deployment of a vaccine to the Americans, at least by the end of the year. So it's earlier than had been expected. AstraZeneca and the University of Oxford have now restarted a UK trial of their vaccine. That's after the study was halted after a participant fell ill. There's also another thing that a lot of investors are looking at when it comes to geopolitical tensions between the US and China. There are reports that the sale of TikTok over in the US was nearing a conclusion. And of course, investors are looking ahead to the Fed meeting that's going to be on Thursday. That could provide clues on not just the policy outlook, but on what Jerome Powell, the Fed chair, does see for the US economy and the global economy. Apart from the Fed, there's also going to be, that's on Wednesday, sorry, but there's also going to be on Thursday, the Bank of England and the Bank of Japan. Now let's take a quick peek at Asia Pacific. I did see this earlier on at around 9:30, and take a look at that. A sea of green across from Japan at least, and over to the Hang Seng, which is up by 0.4%. Both all indices over in China as well enjoying some gains. Singapore's FTSE Straits Times, however, pulling back a touch. Japan's ruling party is also choosing its new leader today. Yoshihide Suga is going to be the favorite to replace Prime Minister Shinzo Abe. Now let's take a quick peek at our own markets. I'm hoping for a reversal here after having seen it open in the red. Not quite the case here. We had opened on the back foot, and this is a stark contrast to how the rest of Asia has been moving this morning. And take a quick peek there, 5953, that's down by close to 0.3% already in the first 30 minutes of trade this Monday. This amid analysts having said that they're actually seeing the index to move sideways this week with an upside, because they said that investors might get a confidence boost from the passage of a fresh stimulus package, which was on Friday. So President Duterte had signed this new stimulus package bill just after markets had closed on Friday. However, it does not seem to be the case, at least earlier in the trading session. Recall that we had ended Friday's session up by 1.1%. And on a weekly basis, you can see that uptrend here, at least in the past 3 days. We were actually up by 3% for the week. However, value turnovers were very, very thin. That went down to 21%, below 5 billion last week per day on average. So, still, Two Trade Asia saying hopes are up for a more encouraging message and hopefully ease this risk of sentiment from geopolitical concerns and from COVID-19. Another thing that might be driving hope here, Philippines is tapping more vaccine makers. That's as we had reported earlier on, as cases are surging anew. They have signed confidentiality agreements with 5 drug makers. So that includes a manufacturer from Taiwan and a second one from China. So a lot watching out on those stocks. Let's take a quick peek at our sectors here and which ones are dragging down our index. Holding firms down by 0.7%. Industrials as well feeling the pain together with services. Still two bright spots here. Properties up by 0.8%, and financials up by 0.2%. Now, speaking of financials, I'm going to pull that out for you because there's a lot of reports related to the banks right now, basically trying to strengthen the quality of our banks and our banking system, making it more secure. Now, first is the Senate bill that is seeking to allow the Bangko Sentral to look into deposits. So basically, there is a measure relaxing the restrictions under the bank secrecy law. So the bank secrecy law actually has a restriction for the Bangko Sentral to look into deposits for possible fraudulent activities. And now the Senate bill 1802 is seeking to amend that to be able to actually probe such fraudulent accounts if the need may be. Now, Senate President Tito Soto has said he will support the measure provided there are safeguards in place. Chief Economist of RCBC's Mike Ricafort said these amendments should be aligned with international safeguards. He also says it will improve the collection of tax revenues. And the Department of Finance and the BSP in July had actually renewed the calls to pass these amendments after the two Philippine banks were dragged into the Wirecard scandal in June. Apart from that, banks are also ramping up efforts to deter cyber attacks. As of course, a lot of BMAP, this is the banking industry awareness campaign, saying that a lot of scammers are taking advantage of the shift to digital amid this coronavirus outbreak. Now, this as the Philippines might be in danger of being included again in the gray list of a Paris-based dirty money watchdog financial action task force. So that's the FATF, if the country fails to pass such necessary amendments to the Anti-Money Laundering Council. So we actually have around 4 months left to pass and implement some proposed amendments to not be included yet again in a gray list. Now, let's take a quick peek at some stocks that are moving this morning. First is PLDT. Now, just a very quick disclaimer here. We are, of course, part of the MVP group, and this broadcast is under Signal TV. This from the Philippine Star. PLDT is now vying for the Lopez owned Sky Cable unit. They're hoping to close the deal after the ghost month of this ends, which is of course around September 16. This is from industry sources telling the Philippine Star. So this cable provider of the Lopez Group is estimated to be worth 15 to 18 billion pesos. According to our sources, the MVP Group is ready to make an aggressive offer to make sure that it bags the deal. So apart from Sky Cable and Signal TV, you've also got actually the Villar Group, which has a cable company called Prime Asset Ventures. Further, earlier, sources had said that, according to the grapevine, Ayala was interested in it, related to its Globe unit, and sources have said that they are not going to pursue that. They might instead actually help the MVP Group fund the acquisition through a loan via BPI. Now, just recently, PLDT had sold some of its price buildings like the Smart Towers for around 5 billion pesos to Consunji's DMC Urban Developers. It's not evident whether this is related to the planned deal. Recall, we also had Al Panlilio, Chief Revenue Officer of PLDT, last week on our show, saying that they have had a good first half of the year despite all of the issues and will continue with their rollout. Now, more on markets later on in the broadcast. We've got with us Regina Capital's Luis Limlingan. Okay, let's check in on the biggest headlines we're watching as we kick off this week. Let me just go through them. The government's debt payments have dropped by a third in July. That's amid a drastic cut in amortization payments. You can see on your screens here, government's debt payments were down 34% year on year to 61 billion pesos. This is according to data from the Bureau of Treasury. Still, this figure is higher than the debt service bill, which we recorded in June. Amortizations plunged 96% to 1.5 billion pesos, while interest rate payments rose 16.5%, with more than half going to domestic lenders. The government's year-to-date debt service bill is down 15% to 608 billion pesos, but that is already 60% of the programmed debt payments for 2020. Now, excluding debt repayments, net borrowings from January to July have now reached 1.7 trillion pesos. This is surging from last year as a result of expenses from the COVID-19 pandemic. The government is looking to borrow 3 trillion pesos from both local and foreign lenders this year. That's to plug its budget deficit that is seen widening to 9.6% of GDP. The country's outsourcing industry is looking to try its luck in new markets as it searches for a much-needed investment. The expansion targets countries such as Singapore, Japan, Malaysia, and Sri Lanka. The Philippines slipped one spot to 6 in the global index measuring the most attractive outsourcing destinations. The survey noted that the Philippines was among the hardest-hit economies by the pandemic. Lack of stable internet and the suspension of public transportation proved to be a major challenge for most companies back in March. That's after the government imposed lockdown measures. The Information Technology and Business Process Association of the Philippines, or IBPAP, said trade missions and investor meetings with stakeholders in the United States, Canada, Ireland, and Australia are also in the pipeline. The IBPAP hopes companies that have invested in Metro Manila can expand to other regions and that new investors can set up shop here in the country. Now, the group has also pushed for a longer sunset period before the proposed changes in the country's incentive scheme under the CREATE bill that is currently pending in Congress. The Trade Department said the Small Business Corporation, or SB Corp, is eyeing to expand its funds for lending to MSMEs. That's through bank financing. A part of SB Corp's 10 billion peso budget under the Bayanihan 2 law, meanwhile, will be used to pay for interest. Trade Secretary Mon Lopez explains that for SB Corp to lend out funds to small businesses at 0% interest, they need to tap their budget under the Bayanihan 2 to pay for the bank interest incurred in borrowing additional funds. Lopez noted that this is a, quote, good scheme as bank financing will expand their available fund by up to 20 times when they use the Bayanihan 2 budget to subsidize interest rates. The DTI is currently in talks with Land Bank and DBP to expand lending to small firms through this scheme. The proposed 2021 budget for the Trade Department and its attached agencies is at over 20 billion pesos with 1.5 billion allocated for SB Corp. It's just a couple of days before the Ghost Month officially ends, and traders are looking to get back into the action. We have with us Luis Limlingan of Regina Cap to tell us which stocks to watch. Good morning, Luis, and welcome back.
Hi, good morning, Danie. Nice to be back.
Luis, let's kick off broad here. I mean, a lot were expecting it to look better today, at least, short term looking, especially since, you have the rally, the global rally back here. The entire Asia, it seems, at least from the first 30 minutes of trade, is in the green. What's going on here, especially since, President Duterte had just signed the Bayanihan 2 Act. It's supposed to be aiding the economy. Why are we not feeling the love?
There's probably some spillover from last week. Even if, for example, the U.S. stock market, it did close modestly higher on Friday, but volumes are rather low. And Wall Street was rather volatile for the whole week, even especially that it was shortened. For the week, I mean, you could see that U.S. market, especially in the tech uh, segment, was actually down, I think, 3%. What I think everyone is watching is that the S&P dipped above the 50-day moving average, so it's rather critical at this point. So people are, I think, just thinking of the week on the sidelines, given that they want to see how the US is going to be performing for the rest of the week. And of course, there's the upcoming Fed meeting, which is on Thursday. So people are just rather on the sidelines for now.
Luis, why is it that when the U.S. sees, close to a correction, maybe not a technical correction, the spillover doesn't go to our markets? Shouldn't it be that, it seems that there's more appetite for emerging markets if the prospects, at least let's say for the tech shares, seem to be overvalued according to some investors?
That does make sense, but I guess you also have to look at the composition now of the names that make up all these indices or the stocks in the US. I think they were saying that around 20% is already technology-based type of stocks. You also have healthcare that is around 10%, and some are IT related, which is another 10% as well. Whereas the Philippines, mostly, it's more in the traditional spaces, whereas banking, property, and retail, for example. But at least there's a shift. But right now, it's not as fast as what we were seeing in the US. So when there's usually a correction and you expect that they would be looking at emerging markets, probably they're looking at a different composition altogether and something that fits your portfolio.
Okay, so it's really focus on specific sectors that are buoying these markets. What about the fact that interest rates are at an all-time low, and the Fed is expected to stay put as well, and some still have room to cut. But at least here, we already know, at least according to a lot of people, that they believe that what Ben Diokno is saying is that he's not going to cut further. This is it. Why is it not that people are looking for higher returns in equity markets and are still sticking to low yield safe havens?
Well, obviously, the circumstances right now are much more different. The crisis that we're experiencing is not financial in nature, and that's why people are having a hard time trying to position right now. There's obviously the great debate is whether the recovery is going to be U-shaped, V-shaped, some are even saying L-shaped. So it's really the perspective of each investor as to how they think there's going to be, I guess, recovery and how long it's going to take, whether it's short term or long term. So I think probably the consensus is since it's been 6 months since the lockdown. There was even some concerns. I think when AstraZeneca, for example, they said there were some problems regarding some of the test subjects for the third phase of the vaccine. Probably it's getting investors think that maybe we should keep to cash first before deploying in equities because there isn't really any, I guess, they haven't seen that there's going to be recovery given that there's no vaccine in sight.
Luis, okay lang ba that the curve is not flattening? I mean, the health department has actually admitted that they cannot really say that yet. As long as the economy stays open, have we seen a disconnect na from the number of cases here? Investors are no longer watching that and are actually looking at other things. Like it was Ghost Month. You mentioned earlier of Cam MS, FTSE rebalancing at the end of the week, the tech share sell off. So are these being taken into more consideration up instead of the recovery rate and the COVID rate?
I would like to think that the cases are always going to be of paramount concern, but probably what they would be looking at is whether these cases, one, are manageable, and second, if we have the facilities. So, um, yes, we of course everyone would want to see the number of cases uh, stabilize, diminish, see that we flatten the curve. But the pressing concern is when there are new cases, can the facilities, the hospitals, and the doctors accommodate all of these, right? Because you want to have them confined and uh, let them have them recuperate as fast as possible. Remember last month or a little over that, that was the concern of the medical profession is that they're over. It's already over capacity. But
Mm.
now that I think because of the reprieve that they got for more than a little more than 2 weeks, at least now that they're able to accommodate the new cases. So I think while that is already being contained and we are able to have uh, them equipped to deal with it, I think the focus will be on more economic data at this point.
Okay. Speaking of sectors, what are you watching out for, especially as we end Ghost Month? So in the next couple of days, do you really expect a surge in trading here? And will investors be picking up specific sectors or stocks that were undersold or that were not necessarily as active in the past month?
Probably the sector that I'm looking at right now is banking, given that it's anyone's guess really as to how the non-performing loans are going to be affected long term. Short term, obviously, they're not realizing these losses and they've made these provisions. The problem is the longer this lockdown continues and the more that businesses remain stagnant, you're going to see the rise in defaults. But right
Okay.
now, we've been seeing data that it's rather manageable.
Why, just speaking of banking, we've always had these reports from the Banco Central that our capitalization, our tier one cap ratio is high compared to other countries. The NPLs, the provisions were already set even in the first quarter. But then we still face the danger of being included in a gray list for money laundering, and then there's still so much cyber attacks happening. Up to what extent are you confident about us being able to not just sustain the non-performing loans, but also have what it takes to be in this new normal, in this new digitalized banking world?
I'd like to think that the banks have already factored in that this pandemic and the lockdown could stretch right after next year. In fact, that's why I think they made the estimate during the second quarter, and that's why the big banks such as BDO and BPL already said that they're going to make this certain amount of provisions between 15 to 20 billion for the whole year. At least for the rest of the year, you can see where they're looking at. Now, what remains to be seen is next year, because again, estimates are saying that there's going to be a vaccine maybe end of the year. That's what they're claiming in the US. Some are even saying it might be stretched to late of next year. So that's what I think is going to be uh, the big debate moving on for the next few months.
But Luis, vaccine or no vaccine, we've already seen monetary policy happening, diba? Why are we still seeing the not a better rate of money of loans increasing? I mean, it's still increasing, but definitely not at the rate that the soured loans are defaulting.
Well, again, this is probably just to have to do with the changing business environment. Whether banks are going to be aggressive in lending, given the type of customers they have. Of course, I think they're trying to stay away from uh, retail and probably going to corporations that they think will be able to meet their debt obligations. So probably that's why we're seeing this type of movement, and that's why it's rather erratic and unpredictable. The banks have to be changing their strategy. They have to be looking at higher quality loans, probably that they can probably ensure that they're going to be getting collections.
Luis, still on the topic of banks, before we let you go, tell us about this PNB surge. I mean, 18.62% in the past month. That was after they had reported that they will, now have a plan to reevaluate their prime properties. Why this surge? What's the link, fundamentally for PNB? Will they be using that for the soured loans? Will they be able to, bail out PAL or help out any of the other LTG companies? LTG had also risen dramatically because of that. So tell us, is this justified? Are you seeing a pullback from this surge?
I'd like to think that the price surge is justified. Obviously, everyone has been keeping an eye out on the stock, and the company did say that they're selling some of their assets just to raise money and unlock value in the company. Uh, it's anyone's guess whether they're going to use it for some cash dividend to repay their debt obligation. But we've seen, for example, in the past or this year with LPG is that they've been paying higher cash dividend. I think it's part of the fundraising for their other subsidiaries. So maybe they're also speculating that we're going to see the same for PNB as well.
Are we going to be seeing the same for other banks?
Well, I think that the strategy of PNB is much more different from what we're seeing with the other banks. Uh, Perhaps it really depends on the loan portfolio of those banks, as I mentioned earlier. How much of them are concentrated in retail, government, or corporations, and depending on whether they need the cash. I would think for now they're probably not going to be doing the same strategy now that the year is we have 3.5 more months to the year, so probably they're going to be looking first at a more conservative strategy before they look into 2020. I think they want to have the cash ready just in case for anything extraordinary shocks that might affect the company as well.
Okay, and PNB trading down together with the rest of the local bourse. It's down 0.8% to 23 pesos and 70 centavos. Luis Limlingan says to watch the banks as we close off Ghost Month in a couple of days. Thank you for those insights, Luis.
Thank you.
And that's a first look into the business day. Today is Monday, September 14, 2020. Catch us again tomorrow morning, 10 a.m. I'm Danie Laurel, and we are One News.
Bawat sumbong, may solusyon. Ganyan kagaling ang idol ko. Hindi lang ikaw, hindi lang ako, kundi ng bawat Pilipino. Mga humahanga, di mo na mabilang, pati mga